Hi, welcome to Pennsylvania Newsmakers, and thanks for watching. Well, we're going to go on the inside of the subprime mortgage crisis, and then the great debate over how to fund roads, bridges, and mass transit continues in the state capitol. All of that after these words.
This is Pennsylvania Newsmakers, a fast-paced, unrehearsed weekly discussion with and about the leaders who shape your world. And now, here's your host, Terry Madonna.
Hi, welcome to the program, and as always, thanks for watching. Well, let's face it, we may or may not be in a recession. It's all the big news around the country. One of the prime offenders is the subprime mortgage crisis that we have. You know, folks who may or may not have taken mortgages and homes who shouldn't have done, and financial institutions that gave them the money that maybe they shouldn't have done. We've looked at this from a variety of angles, but never from the inside. And today on Pennsylvania Newsmakers, we're going on to the inside with Frank Bowersox. He's the president of the Pennsylvania Association of Mortgage Brokers. Frank, welcome to the program.
Thank you, Jerry.
Well, I'll tell you what, this is a fascinating subject, and I mean, it's certainly complex, and I want to thank you for coming on. We've dealt with it in some other ways, but we've not gone on the inside. First of all, when we hear this subprime market, give me a quick 30-second update. What's the subprime market when we're talking about, you know, mortgages, let's say, home mortgages?
The subprime market is primarily programs that were generated to assist those who were credit challenged or income challenged in some way. When I say income challenged, possibly not have sufficient assets to afford a traditional down payment, or who had credit scores that were less than were acceptable in the secondary market. These programs all came together and became known as the subprime market. Okay,
now, let's be balanced. On the upside, we give folks a chance to get a house who wouldn't get a home. The great American dream.
Exactly.
On the downside of it, credit was probably given to folks who shouldn't have gotten it. Yes, no?
That's correct.
And the big debate is whether when lending institutions were giving folks credit, the folks who got the credit, you know, bought the homes, weren't fully aware of the terms. That's also an issue. We can debate, you know, the extent to which some people knew it, but that's certainly a major allegation. Would you agree?
It's an allegation. I don't totally agree with the.
Okay, that's fine. I mean, that's why we're having you on the program. All right. Well, let's just go through some of this then. How did we get where we are? I mean, all of a sudden, you know, in the last week or so, we've got major financial institutions reporting huge, I mean, incalculable losses. Like once I get over $50, the accounting get. But we're talking billions with some of these institutions. How do we get here?
Actually, this started with two congressional acts that happened in the late 90s that were designed to loosen credit and put more money into the marketplace in the hopes of increasing the percentage of home ownership in the country. And as time went on, with the development of new and more programs that were saleable in the secondary market, and that's key, by the way, and that's one of the reasons you're seeing some losses that have happened in the last week, because you're seeing the reports coming from those people who are the purchasers in the secondary market, the investment bankers off of Wall Street.
So let me get this straight. You might get a mortgage, and in a mortgage you get bought up by somebody else, and at the end of the day, these big financial conglomerates would hold the paper, so to speak, for lenders that were made sort of down chain. Or
the idea of direct lending today is almost non-existent. If lenders today didn't have access to a marketplace to resell their loans, to recapture that capital, and to plunge it back into the mortgage business, you know, we would be severely limited as to the number of people who could actually buy a home.
All right, let me go back to something you said that was pretty intriguing. The government stepped in order to make it easier for people. Is this another government program going awry?
Not necessarily. This was an opportunity to utilize capital and to put it to work and to loosen some of the constraints in its regards to underwriting criteria, things of that nature, to make mortgage loans more available to more people. And let's think about this a minute. The worst case scenario is that 17% of subprime loans are in foreclosure. And that's huge. And one foreclosure is far too many as far as the association is concerned. But on the opposite side of that is that if you take that number as real, 83% of people who have subprime loans are making them work. This same group of people, that 83%, which amounts to billions and billions of dollars in mortgage loans, 10 years ago would not have qualified for home ownership.
Right.
Those people would still be in apartments.
Yep.
So while we certainly aren't making light or of the 17% that have foreclosure problems, they are definitely a problem. But we created the perfect storm.
Right.
We made 100% loans. No income verification, interest only. We put these three things together.
Yep.
And who do we offer them to? We didn't offer them to people with FICO scores or credit scores in the 700-plus area. We offered them to people who have demonstrated, by past experience, they have difficulty making their payments on time.
All right, we're talking with Frank Bowersox. He's the president of Pennsylvania Association of Mortgage Brokers. We'll be back after these words.
This broadcast of Pennsylvania Newsmakers is presented by the Pennsylvania Chamber of Business and Industry, the statewide voice of business. This broadcast of Pennsylvania Newsmakers is presented by Pennsylvania Medical Society, doctors and patients, preserve the relationship. And by the Pennsylvania Manufacturers Association, business in Pennsylvania is our business.
Hi, welcome back to the program. We're talking about the subprime mortgage crisis with Frank Bowersox from the Pennsylvania Association of Mortgage Brokers. Okay, big question. Outlook for 2008. I'll tell you, at least what I read and catch, I mean, it's all in the news. Maybe it's a lot of hype. You've helped give us some perspective on it. What's the outlook?
Well, I think I can speak more for Pennsylvania than I can nationwide. Pennsylvania, according to the latest delinquency and foreclosure report that was released by the Mortgage Bankers Association in Washington, which is the report that most of the legislators and associations follow, we have seen yet another decline in foreclosure activity in Pennsylvania. We are down 19.9% from a year ago. We are down 18% over the previous month. Fewer foreclosures, fewer delinquencies.
So you think
we have dropped from 33rd, being ranked nationally 33rd in foreclosures in the state, to 34th to foreclosures in the state, which is an improvement.
So we're going in the right.
Going in the right direction.
Okay. What about? Well, what needs to be done? I mean, do we have the status quo? I mean, what has your association done to try to correct this?
Well, 3 years ago, we met with the Pennsylvania Mortgage Bankers Association and the then Secretary of the Banking Commission to write a proposal, legislative proposal, in which we requested licensure or registration of everybody involved in the mortgage loan application process.
So not everybody has professional licensing, which would be controlled by the licensing board or commission?
Correct. Currently, licensees are broker owners or mortgage lenders who are not federally chartered or regulated are required to have a license in the state of Pennsylvania, and they have a continuing education requirement of 6 hours annually. What we introduced was legislation to increase the continuing education requirements and to make it by testing licensure of people who are involved in the mortgage loan application process, normally known as loan officers.
Right.
There were some additional requirements in that legislation, but basically that was, licensure, testing, education, prior to testing, continuing education after testing, and we introduced that to the state legislature 3 years ago.
Going anywhere?
it is part of a six-pack of bills that was just released by the Banking Committee onto the floor in this latest session. We reintroduced that every year.
Is this a question of a few? I mean, let me just revert back to an earlier line of questioning. Is this a question of just a few bad actors? You know, we have that, you know, we want to blame a whole industry for a problem. It's typical sort of what we often do. Is this a question of a couple of maybe bad actors that, you know, did some things they shouldn't do? There's some folks who you know, had a history of problems, as you pointed out.
You know, it's a case of, and I think the public needs to understand that a lot of blame has been aimed at the mortgage broker industry, and mortgage brokers do not approve loans. Never have. They do not design mortgage loan programs. The mortgage broker industry is made up of people who act as the production arm for major lenders through wholesale correspondent activities. So, is it a case of a couple bad actors? Absolutely. You know, every industry has people who are unprofessional, unethical. If you came to me and applied for a mortgage loan that I knew you didn't qualify for, or that maybe you did today, but in the next 2-3 years would have rates and payments that would be beyond your ability, and I turned you down, if you wanted the house badly enough, and this happens all the time, the consumer goes down the street to the next broker until they find someone who is willing to say, I'll make the loan.
Before we let you go, you know, hopefully you'll come back and there's some other things we should explore.
Certainly.
Let me go to this one final issue. How do you think the industry should police itself to prevent, you know, if it's a question of a few bad apples, what should the industry do?
Well, licensure is definitely a step in the right direction. If everybody involved in the application process has to have education and be tested to get that license, and then continuing education requirements every year thereafter, and make them valuable requirements, not just a couple hours to say that you're doing it. It needs to be worthwhile. Through education and licensure, you now have the ability to track bad actors as opposed to them just going from one company to another.
All right. Thanks for coming in. I mean, we've taken a look at this from a variety of viewpoints, and you know, we wanted to be sure we got your viewpoint in. There's some other questions. Maybe you'll come back at a subsequent time. We can continue this discussion. All right. Over on Capitol Hill, they're still debating the funding of roads and bridges and mass transit. We'll continue with that subject after we pay some bills.
This broadcast of Pennsylvania Newsmakers is brought to you by Pennsylvania Credit Union Association. Pennsylvania Credit Unions, where people are worth more than money. To find a credit union that is right for you, check out ibelong.org. And by the Energy Association of Pennsylvania, Pennsylvania's energy information source. This broadcast of Pennsylvania Newsmakers is presented by the State System of Higher Education. 14 state-owned universities. The state system is the largest provider of higher education in Pennsylvania. And by the Hospital and Health System Association of Pennsylvania, working towards a healthy Pennsylvania.
Hi, welcome back to the program. Well, highway mass transit funding, it's been a big issue in the state legislature. Joining me to continue the further discussions on that point are Bob Latham. He's the Executive Vice President of the Associated Pennsylvania Constructors, and Judy Schwank. She's the President and CEO of 10,000 Friends of Pennsylvania. Long titles, but people with a lot of knowledge. That's why they're on the show. Okay. Bob, one big study, Governor Rendell keeps touting, $1.7 billion, roads, bridges, and mass transit. Before we get into the subject, are we going to get it? Do we need it?
Well, absolutely we need it, Terry. I mean, the study, I have to remind everybody, when the Reform Commission completed that study, they said it would take $1.7 billion just to hold the highway and transit system that we have now in place. What we really are talking about here today is what's our vision for the future in this? Where are we going with transportation, and how is that going to affect people's lives here in Pennsylvania?
Judy, is this one of these issues where we know we have a problem, we don't know exactly how to solve it, but yet we have to solve it in a way so that we get the job done right. At the same time, make sure that land use and all this stuff that you folks have historically are done right. Take it from
exactly, Terry. Before we spend a dime of any revenue that we see, we've got to have a plan. And we've got to think first, what is there in our infrastructure that needs fixed? We have failing bridges, we have crumbling roads. So let's look to, first perhaps, to our maintenance kinds of issues. Then when we look to new projects, what do we need? Let's look at how they link back to economic development, how they connect our towns and enhance what we already have rather than exacerbating some of the problems that we have. And let's not forget that beside automobiles, we've got to think about trains. We've also got to think about communities that are walkable as well. There's all sorts of ways to get around in transportation.
Yeah, there are lots of pieces of this. We've done a ton of programs on this, by the way. You know, had a lot of folks on differing views and differing opinions about it. But the one thing that strikes me is that not only don't we have kind of a consensus now that the tolling of Route 80 has come under attack and we're back to looking at this business of leasing the turnpike. I have no clue which is the best one. That's why we have folks like you on to help me out. But is there some way that we can get a process that makes some sense? Do you think the stakeholders have been involved in this, or is this some kind of discussion rarefied, you know, in the bowels of the legislature, which we often hear about?
Well, we tried to have an orderly process here by bringing experts together, and that was the result of the Transportation Funding Reform Commission's report. Prior to that, the Pennsylvania Economy League, which is pretty well respected, did a very lengthy study benchmarking Pennsylvania against other states. And they said, essentially, in order to move the state forward with mass transit and the land use component aspect of that, there was no one magic bullet. It was going to take an increase in highway and transit user fees of some sort. We're going to need regional funding for some of these systems. There was a role for public-private partnerships to play, and some debt financing. But there was going to be political pain involved. Somebody was going to have to step up and say, look, the taxpayers, if you want a good highway system, if you want transit systems that work, you're going to have to pay a little bit more money. I mean, we haven't raised any kind of fees in this area for 10 years.
And you agree with this?
Absolutely. There is no magic answer to this. And as a matter of fact, 10,000 Friends over the past year, Terry, has gone across the state meeting with local planning organizations, the people who actually make decisions in communities about what projects get done, and talked with them about the problems that they face. They don't have enough funding, and trying to prioritize what needs to get done is a significant problem for them.
Go ahead.
I was going to say, I mean, what we ended up with Act 44, we think it's a start. And
that's the bill to toll Route 80.
Route 80 and increase the tolls on the turnpike. Sorry.
The tolls in the turnpike always go up. They were just, I think, going to accelerate them. Do I have that right?
Right. That's exactly
it.
Go ahead. But you have to understand the amount of money that bill raised is really about a third or a half of what the Reform Commission talked about. And the Reform Commission's report, again, was simply just staying pat and fixing our current system. But again, in order to facilitate some of the things that Judy's organization and that we're advocating, it's going to take a lot more money. We had a national commission that just came out and recommended a huge increase in infrastructure financing. The governor was out in California with Arnold Schwarzenegger recently. But the bottom line is there is no magic pot of money that's going to fall on Pennsylvania.
All right, the big issue of the day, I think it's something that the legislature is revisiting even as we sit here and chat about it, how to figure out what to do with a huge problem, maybe $1.7 billion worth of a problem, plus we'll deal with that after these words.
This broadcast of Pennsylvania Newsmakers is presented by Highmark Blue Shield, changing the way health plans work for business with a variety of plan options for employers and more choices for employees. Information is available at highmark.com. Have a greater hand in your company's health. And by the Pennsylvania Healthcare Association, the future of long-term care. This broadcast of Pennsylvania Newsmakers is presented by Penn Future, where we believe that every environmental victory grows the economy, and by the Pennsylvania Cyber Charter School. bringing educational innovation and freedom to the children of Pennsylvania.
Hi, welcome back to the program. All right, Judy, look, one of the problems, and I think Bob has sort of identified this as well, has to do with sort of the economic consequences of traffic congestion. Now, maybe there are parts of the state where this isn't a big issue, but there are parts of the state, and, you know, there that intimately relates to land use.
Absolutely. What we need to be thinking about for future expenditures, Terry, is that projects that we put into place will have implications in tax dollars that are going to be spent for other things, like schools. Right. When we put in new infrastructure in places that were perhaps better targeted for farmland preservation or for open space, what we're doing is increasing costs for local governments years down the line, and then creating more issues with traffic in the future as well.
Bob,
I'm not saying that we
ahead.
don't need new projects.
Right.
Absolutely we do. But let's make sure that they're linked to the best possible land uses, and that we do think first of economic development.
Yeah. Bob, one of the big concerns I think that we've tried to address here is how are we going to come up with this huge chunk of money? I mean, it's not small change even for the legislature. It's big money.
Well, that's correct. And again, getting back to some of the findings of the Pennsylvania Economy League study, I think that a measured menu, I guess, if you will, of options is going to be the way that you have to go. I mean, one of the right now the debate has boiled down to, well, we have to sell assets or we have to raise the gas tax. Mm-hmm. Nobody wants to raise the gas tax, and nobody wants to sell assets. So our only other idea is to bond finance.
Well, or at least that. I mean, in some respect,
the problem with leasing the turnpike. The only problem we don't have a philosophical problem with monetization or leases of assets. The problem is there are so many unanswered questions as to what
you're not going to do it in
means.
6 months. Go ahead.
And the other thing is, you know, we have looked at some of the other projects around the country. Indiana, for example. They've taken advantage of this money. They've got a huge building program that runs out in 10 years, and they have to defend that money in the appropriations process.
You get the last word. We'll have you both back, and we'll continue this discussion. Thanks for watching Pennsylvania Newsmakers as always, and stay well.